A very good evening, students, to all of you. So, students, in the today's class, students, we will be continuing on the depreciation particular part, and also, students, we will be introducing primarily certain ICDS as well in our today's session. At the same time, we will also be looking into now some portion on something which is known as capital in nature. So today's topic, students, today's class would be very important because generally this side of the segment of the portion, students find it very lengthy. Now, students, those who would have referred the module, generally if you see the PGBB module, as you all are aware, students, because of the kind of the voluminous coverage which is there, unfortunately we just can't help it because this is a volume which we have to cover primarily at final CA level. And that is, we have to do it thoroughly. And the bulk part, if you see the discussion of this particular module is on the depreciation and the actual cost or WDV as the case may be. That is where the entire bulk of your syllabus is covered so far as this PGBP module is concerned, PGBP or chapter is concerned. Now, students, therefore, I'm going to give you a checklist. And on the basis of that particular checklist, you are going to revise this entire depreciation and the actual cost or WDV as the case may be. So just keep in mind those particular checklists primarily, and on the basis of those checklists only, we are going to proceed in the discussion and deliberation of the concept of depreciation. So let's begin with this one, students. I hope that all of you are there. Kanaya, Radha, everyone. So students, let's begin. I'll just share the slide first with all of you. So students, I hope that all of you have also got the notes. What is the status of the notes? Can you just confirm once? Good evening, Kanaya. Radha. The notes now in the portal, those students, again, I'm telling you, all the notes that we are using it in the class, all the notes that we are using it in the class, request to the students that they log in through the portal and you will get all these notes which are there. PDF modules anyways is there in the website, so that is not an issue. Perfect. So therefore, I think all the notes till 4th of August is there, and that is what is required, students. On that note, students, let's begin. Let's begin, students. Now, if you see, students, over here, please pay attention, every one of you. In the context of depreciation, students, this is precisely how you will always revise two parts of the discussion of depreciation, and you will get the question in the examination in either of these two parts. So what are those two parts? I'll just do for all of you students. So over here, if you see in this context, students, for depreciation allowance, you can take a note of it, students, over here. Now, primarily, part A is all about what? As far as part A is concerned, that what we are discussing it right now on the depreciation allowance, part A, that we are discussing it right now, is about, students, herein, the basis of depreciation, then the second one, students, would be the eligible asset and the rate, students. That is the second part. And the third one, students, in this context is eligible asset and the rate is your second point. And the third one, students, is what? So basis of depreciation, eligible asset and the rate. The third one happens to be the condition for depreciation allowance. Then the last one is the UAD and the Bradford business loss hierarchy. UAD and the Bradford business loss hierarchy. If it is possible to you, students, just take a note of it. Hierarchy set off. UAD and the Bradford business loss. I think that you all people have done in your interest fee as per the old Income Tax Act 1961. Something you would have done for the hierarchy of set off, when it is a current year depreciation, when it is a UAD, and then when it is a Bradford business loss. So same sort of a hierarchy also applies under the new Income Tax Act 2025, primarily in this case. This is your part A, students. Now, so far as your part B is concerned, so in the part B would be the concept of the actual cost. Now, in this actual cost concept, students, multiple ICDS, many of the ICDS students will get triggered. So, multiple ICDS, without now naming it, there are many ICDS like ICDS number 5 for tangible fixed asset. Then thereafter the ICDS on the foreign exchange fluctuation, then the ICDS on the subsidy, so on and so forth. So there is multiple things. So this primarily will cover all your ICDS. Effectively, your ICDS will get over here in this concept. Are we getting this one now? So students, if you do it very logically, in a very sequential and in a very organized manner, this very big concept, students, I can tell you on the day of the examination, you should only sit on this and then try to figure it out, that this is what, try to visualize. Basis of depreciation, let's visualize, students, what we have learned in the last lecture. Let's take one by one. So far as the basis of depreciation was concerned, students, if you can recall, I told you that under the Income Tax Act, we do have either the SLM basis or the block method. SLM basis is an optional scheme applicable only to a category of SSC, and that too for an eligible asset. Which is the category of the SSC who has still the option to claim the depreciation on the basis of the SLM in respect of their eligible asset. That particular SSC happens to be who is engaged in the power generating distribution unit or transmission unit. That is the SSC, students. That is the SSC. The eligible SSC, that is what we say. Now, this eligible SSC, students, as we all know, this eligible SSC will have an option that they want to claim in respect of their eligible plant, not for everything. Huh? Please, many students are under this impression, sir, the power generating unit primarily, that category of SSC is primarily are eligible for SLM scheme of depreciation in respect of all the asset? No, only in respect of eligible plant. Only in respect of eligible plant. Generally, which is that eligible plant? That plant which facilitated the generation of power. In a simple word, students. I hope that all of you are clear with this one. Every one of you. So this is what the point is all about in this context. Fine. After that, students, the block scheme. The next one was what? The block scheme. I gave you the format, students, in the last lecture. And in that particular format, I told you that there is an opening WDV, then the additions are being made, and the addition, students, are being made on actual cost. Please recall the format of your block. Opening WDV, add additions, and that addition, students, are being made on the actual cost of the asset. And after that, students, you reduce with what? The money which is payable. Money which is payable on account of sale, asset being sold, or asset being demolished or discarded, or through an insurance compensation. For whatever be the reason, you should receive the money. And after you have received the money, that whatever is the balance amount will be referred as a closing WDV before depreciation, and on that closing WDV are going to apply the depreciation as per the rate applicable to that particular block. How do we prepare the block, students, by the way? How do we prepare the block in that case, students? If I say to all of you in this case, say for example, there are intangible assets, students. In the tangible asset, there is a plant and machinery, then there is a building, and then there is a furniture and fixture. So there are three particular broad category. Now, for therefore, if there are three broad category, question to all of you is, are you going to make the block? There would be only be three blocks so far as the tangible asset is concerned. What is the question? Tangible asset, students. Eligible asset for depreciation. Tangible, intangible. Let's focus on tangible. Plant and machinery, building, furniture and fixture. So three broad category. So does that mean that you will have the block? How many block? Only three blocks of asset? Will you have only three block of asset? Is the issue under consideration. What is your take, students, in this case? Only three block? Answer is no. You don't prepare the block on the basis of that broad category. You don't prepare the block on the basis of that broad category. What is required is the class of asset. The block is prepared on the basis of the class of asset. And in respect of that particular class, the asset which are eligible for the same rate of depreciation, the asset which are eligible for the same rate of depreciation, for that you prepare the block. So students, please understand, plant and machinery is a very broad category. In the plant, you will find many subcategories. So of the subcategory, you will see the common rate. So all the assets which is having a common rate in that particular category, all the assets which are having the common rate in that category, in respect of all those assets, you prepare one block. That is how the block is prepared. Same is for the building, and the last one is for the furniture and fixture. So you prepare the block, students, and accordingly, once the block is prepared, you will claim the depreciation allowance. I am going to give you a particular example now. Let me try to test you on that. Let's see if you can just try to get the answers right or not. Now, students, before I give you that example, primarily just coming back to the discussion. Students, one important point that we discussed in the last lecture was that unless and until you receive the money, students, unless and until you receive the money in respect of your asset, which is either sold or may have been scrapped or discarded, whatever be the nature or the character of the money, it can be a sales receipt, it can be an insurance compensation, it can be a scrap value, whatever be the character of the receipt, doesn't matter, but you need to receive the money. So only when you receive the money that the asset will be removed from the block. So no money received, asset will continue to remain in the block even if that asset is no longer in use. That asset, the single asset, is no longer in use. And towards the end of the last lecture, students, please recall, I told you that the single asset use test, is relevant only in respect of a newly acquired asset. The single asset use test is relevant only in respect of a newly acquired asset. What does it mean? It means that in the case of a newly acquired asset, it will be eligible for depreciation only when it will form part of the block, and it will form part of the block only when the asset is put to use. That asset which you have purchased has been put to use. So once the newly acquired asset is put to use, it will be a part of your block, and the moment it becomes the part of the block, it will qualify for the claim of depreciation. What about the subsequent period? In the subsequent period, do you still go with the single asset use test? In the subsequent period, later on, subsequently, once the asset is already the part of the block, once the asset is already the part of the block, do you then go with the single asset use test? Answer is no. At that point of time, the single asset use test will hold no relevance. Then what we have to see? We have to see whether the block as a whole, if that is in use. And if the block as a whole, if that is in use, and in that entire block, if few of the assets are not in use, few of the assets are not in use for whatever be the reason, and most important condition, students, what was that? And in respect of those assets which are not in use, you have not received any money, you have not received any money, then can we say that the asset continues to be a part of the block? Answer is yes. Will it be eligible for depreciation? Answer is yes. Yamaha Motors, Delhi High Court. So this is, students, where we were in the last particular class, and if that be the case, students, we will proceed further. Everyone? Perfect. Now, students, eligible assets and the rate of depreciation. I think at least on the eligible asset, we have already have referred something on the eligible assets. So we can now proceed further quickly, students, uh, in this context. Now, coming on this particular part, the eligible asset, students, over here. Students, part B. Please come to this one. I told you already, there are three broad categories: building, machinery and plant, and furniture. This is a three broad category. And students, can you see this? These are the tangible assets. And then there is the intangible assets. So just have a look to the rate over here. 5 to 45%, students. Students, goes without saying, I have given you already the module page numbers for each of our class notes also. So therefore, those detailed discussion that has been there, we are doing it in the class. But this primarily will always help you to revise and then solve the question, because we are also introducing practical questions. Now, if you see intangible assets, in the intangible assets, students, be careful here. One important amendment in this context, not in the Income Tax Act 2025, in 2021. Intangible assets, students, can you see over here? Know-how, patent, copyright, trademark, license, franchisee, or any other business or commercial right of similar nature. Not being goodwill of business or profession. Students, be careful. Goodwill is not an eligible asset in this context. Goodwill is not an eligible asset. I hope that all of you are clear with this one. So therefore, this is not about the self-generated goodwill, because for self-generated goodwill, the cost is any case nil. This is about the purchase goodwill. So say for example, if a business has been sold and the purchase consideration paid is more than the net asset, the purchase consideration which is paid is more than the net asset, then the difference, students, would be considered as goodwill. All of you agree? The difference in that case, students, is nothing but the goodwill. So that is a purchase goodwill primarily. So therefore, in this context, will you be eligible for depreciation on the purchase goodwill? Answer is no. Because some people will think that, sir, in this case, this higher amount which somebody is giving over and above the net asset, why somebody can consideration, students, is paid over and above the net asset? Did you all got this, students? Please confirm this particular part, because see, you will never know. Please confirm this particular part, students. That instead of directly telling you that it is a goodwill, instead of directly telling you that it is a goodwill, do you know what they may say? They will give you like this. Purchase consideration is 1.5 crores. The net asset is 1 crore. So that 50 lakhs extra that has been paid, that is what is referred as a goodwill, and why it has been paid beyond net asset, for that the example has been told to all of you. Students, all of you have understood this. Now the question therefore is, of that extra 50 lakhs, can that be considered as an eligible intangible asset, and therefore on that rupees 50 lakhs can you claim a depreciation allowance? Answer is no. So it will not be eligible for any depreciation. Perfect, Radha. So I hope that every one of you are clear with this one now. Everyone. And that exactly is the point, students. So this is how things has to be looked upon. Now with that, students, if this is the case, so just be very careful, because there was a Supreme Court judgment earlier. In that judgment, it was said that the goodwill was eligible tangible asset. It is an eligible intangible asset, and therefore the assessee is allowed the depreciation. So to overrule that judgment, that this specific provision has been introduced in 2021, where it was said that the purchased goodwill will not be considered as an eligible intangible asset. It will not be considered as an eligible intangible assets. Okay. Now, students, be careful over here. All these things, sometimes the questions are very deep. We generally read only the initial names like know-how, patents, copyright, trademark, license, and all. Now, say for example, a stockbroker has paid rupees 2 crores to obtain the membership card of a stock exchange. To obtain what? A membership card of the stock exchange. In that case. And the question further says that 2 crores of the amount has been debited to the profit and loss account, which implies that he has sought to claim deduction. He has sought to claim deduction of the membership card that he has paid for becoming the member of the stock exchange. Whether in that case, students, the 2 crores of the fee that the stockbroker has paid, will that be allowed to him as a deduction? The 2 crores fee that the stockbroker has paid, will that be allowed to him as a deduction? Answer is no, students. And why the answer is no? The reason is very clear. This 2 crore fee, students, that he has paid, in this case, tell me one thing, by paying 2 crore fee, he becomes what? A member of a stock exchange. And by becoming a member of a stock exchange, does he get a business right? Does he get a business right or not? Answer is yes. Not all the assessee, students, be careful, not all the person can be in the stock broking business. So if you want to become a stockbroker of a particular exchange, you need to become the member, and therefore unless and until you acquire the membership card, you will not be considered as eligible stockbroker for the stockbroking business. So therefore, by paying that 2 crores, is it giving you a business or a commercial right? Answer is yes. So whether any other business or commercial right primarily, which is primarily, can that be considered to be an intangible asset? Answer is yes. So here one example, students, can be written. Primarily stock exchange membership card, payment towards stock exchange membership card, students. Payment towards the stock exchange membership card is one of the example. Is that point clear to all of you, students? Every one of you? Quickly. Perfect. So therefore, this is what it is. So if supposedly if the expenditure has been debited in the profit and loss account in your examination, so what you're going to do, students? What you're going to do? You are going to add it back. Please don't stop there. Not only you are supposed to add it back, don't forget you are supposed to give a proportionate depreciation allowance. You are supposed to give what? A proportionate depreciation allowance. I hope that every one of you are clear with this. And also please take a note. If in the examination the question says that he acquired the stock exchange membership card somewhere in, say, for example, December or November 2026. December or November 2026. So what we are going to say, students, in that case? December or November 2026 if he has acquired the membership card. So please tell me in that situation, don't forget, in that case, the rate of depreciation will become 50% of the normal rate. Your normal rate here it is 25%. Of 25%, 50% is 12.5. That particular thing you should always keep in mind, students. With that, let's try to proceed further, students, quickly. Eligible asset is through. In this case, let's see now, students, we will correspondingly all that, students, I have discussed with you in this case. Intangible assets, all that goodwill and all. Students, if you see license, license was covered in the eligible asset. Students, license was covered in the eligible asset. Yes, it was covered. However, few license students, few licenses, be careful, students. Few licenses, students, are what? Are given in a amortization manner. Like, for example, students, telecom license. So, telecom license, students, if you see over here, primarily in the old section, it was 35 ABB. In the new section, it is section 52. So some of the license is given, like in the deduction of these license are given in an amortized manner, not in, and it is separately covered in a separate section. So if there is a specific provision for providing the deduction of capital expenditure, then that provision will be made applicable, and for all the other assets, probably it will be decided whether it will be eligible for depreciation allowance or not. For all the other assets, it will be decided whether it will be eligible for depreciation allowance or not. That's it. This is the fate of a capital expenditure in the form of an asset. This is what? A fate. Fate means what? The destiny of a capital expenditure which is incurred to acquire an asset or to construct an asset. So what is a fate? There could be some specific provision which regulates their deduction. Any example of specific provision? Yes, like telecom license, wherein a capital expenditure which is incurred to acquire the telecom license, the deduction is governed by a specific provision, which is section 52. And the deduction is given in the amortized manner over the life of the license. Amortization over the life of the license. So if the life of the telecom license is 10 years, 10 years amortization of the telecom license fee that you have paid, that 10 years amortization will be granted as a deduction. For other asset purchased or constructed, their deduction will be governed by the depreciation allowance. So you have to test whether in respect of these assets which has been purchased or which has been constructed, are you eligible to claim the depreciation allowance or not? I hope that every one of you are clear with this one. Everyone should. Perfect. Very good. So therefore, students, we have dealt with this particular part in this case. Now, students, hear it. I will not, we will come to this capital or revenue part, students, a bit later. This is also covered. The sharp business system, students, very important case law, 2025 Supreme Court judgment. It is covered in the module very extensively. In fact, but we will try to cover primarily in the general deduction. In the general deduction, students, the sharp, if you see in the module, it has been covered very extensively. This 2025 Supreme Court judgment. So I will cover it up in the general deduction. I'll wait for that turn to come. Now, students, let's quickly now run through what are the assets and what is the rate. Very quickly, students. This is to be known. Students, let me, in fact, all of you students, just quickly go through it. I'll prepare a block and I just want an answer from you then. So without now me telling much of it, you just go through it once quickly, students. And then I'll ask you some question on this. Practical question. And then let's see what you people do. Please go through this particular rate carefully. Read it, students? Let me take the next slide. Just a second. Students, there is this motor car. There are two particular motor cars. Can you see this one? Generally, you focus on this particular part only, the general category. The general category of motor car is 15% and 30%. Two rates, 15% here and then 30%. For the motor car part. Fine, students? So this is what it is. Now after this, plant and machinery continued. See, can you see this? Building has got more than one rate. Residential building, a particular person who is doing the business from his home. What is the rate of depreciation for him? 5%. For others, 10%. Plant and machinery probably has got multiple rates in this context. Plant and machinery, students, has got multiple rates, which you can see for yourself over here. And that exactly the point over here in this context. That exactly the point, students. I hope that every one of you are clear with this one. Just quickly run through, students, this. Fine, students. So if you all are through with this particular part, friends, here the general rate, what is the general rate of plant and machinery? The general rate of plant and machinery, students, is 15%. I'll give those, now I'll give you an example, students, how you have to prepare a block, and then one very important concept, students, you are going to encounter now. Many of you students are not even aware of these basic parts, students, over here. Students, tell me one thing. What you have read it. What is the highest rate of depreciation, students? Let me ask you some very basic questions now. What was the highest rate of depreciation, students, in this case? Highest rate, Rana? 40% in this case, isn't it? Earlier, we had Kanaya even 100% rate of depreciation. Now, once the alternate tax regime came into picture, in that case, in fact, the government felt that it is high time that the depreciation allowance has to have an upper cap, and the upper cap over here is 40%, students. 40%. This is the basic rate in this regard. Okay. So 40% is the rate, students, in this context. Now, just be careful. What about the computers, computer equipment? What is the rate of depreciation for computer equipment? It has the highest rate, which is indeed, students, which is again 40%. All of you agree to this one? Perfect. Perfect. Very good. So all of you are aware of this one. Now, students, this is the trap. Students, these are the things which is very frequently you get in question number 1 in the adjustments. And then the students probably goof up whether it is at this percent or it is at that percent. This is where, students, the error is encountered by the students in the examination. What is the error? The classic example is mobile phone and EPBX system. It is just a telephone, students. A telephone probably cannot be considered as computer, and hence you cannot be eligible for the higher rate of 40%. So what would be now? But you will say, but sir, these are my business asset. Yes, don't worry. It will go under what? Under the general rate of plant and machinery, which is at 15%. Which is at 15%. Is that clear to all of you? However, if they tell you printers, scanners, or other computer accessories or peripherals, so those equipment which you purchase, those equipment will be classified as computer, and accordingly it will enter in which block? Will you take these assets in 15% block, or you will take this in the 40% block? You will take these assets in the 40% block, students. It's a 40% block, students, is what will be applicable in respect of them. It is 40% block, students, which is going to be made applicable for them. I hope that all of you are clear with this one. Every one of you. Perfect. Very good. So, students, this is something, this is tested. Huh? These are something basic thing. Now, let me ask you one more question. Since you have read it, electrical fittings, students, electrical fittings will be at what rate of depreciation? This was one of the examination question. Examination question means in question number 1 only, they have said that the SSC has purchased electrical fitting and the amount or the cost has been debited to the profit and loss account. So many students said that yes, allowed as deduction. Some students said that no, it is not allowed as deduction. It is a tangible asset. So some students said that it is a tangible asset. So they disallowed. But if it is a tangible asset added back, then you also have to provide a corresponding depreciation. And if you have to provide a corresponding depreciation, the next question is at what rate? For the electrical fitting. Electrical fitting. Muskan. Indeed. That exactly is the point. Muskan, perfect. Very good. And that exactly is the point, students. It's a 10%. This is where I told you, read the provision carefully. Furniture and fixture. Furniture and fixture. Let's, students, have a look. Furniture and fixture. When they say, please have a look over here. Furniture and fixture. When they say, come back, students. This is the reason why I gave you first chance. First chance to just run through it. Now you know furniture and fittings, including electrical fittings. Including electrical fittings. So this will go not in the block of plant at 15%, but it will go at the block of furniture and fittings. Which block? Furniture and fitting block, and that will go under 10%. Okay, fine, very good, students. Now let me ask you the next question. Now, students, this is the time where you find that many people are putting up solar energy, solar panels are being put, isn't it? So, solar energy is the game of the day. So, if the business house, because if the business house thinks that there are a lot of power consumptions that take place, so they have also gone solar for their power generation needs by putting up the solar panel. So what would be the eligible rate of depreciation in that case? Indeed, it is at 40%, students. The eligible rate, students, in this case would be 40%. And this is I'm discussing this because these are some of the very important, see, these are all practical, these are happening things. And these are the flavor of the season, you can say that way. These are the flavor of the season, students, isn't it? So solar panel, which you can see over here, if you can see in this context, please have a look. This will go under this category. Energy saving devices, renewable energy saving devices, all this will be under this 40%. Now, so the next particular context is sometimes in one of the attempts, aeroplanes was being purchased for the purpose of business. Now, Reliance Industry, Reliance Industry, they maintain fleet of aircraft which is used for the purpose of their business. Which particular rate would be applicable, or what is the block? It is at 40%. It is at 40%, students. I hope that every one of you are clear with this one now. All of you students. Perfect. Very good. So with that, students, this is how it has to be considered. Now, students, herein, let me in fact, now this is what it is. Be careful, students. Let me just students, let me put across a question. Now, if you do this question, your depreciation, students, is over, primary, technically speaking, all the technical part of it. Then we will be very near to the part B. Just I want you to answer me this, or you have to copy it on this example, students. Every one of you will copy it on this example. Say, for example, students, A Limited has got two business. A Limited, students, has got two business. One is a cement division, and another, students, is a steel division. So there are two divisions. One is a cement division and another is steel division, students. Exactly. Can you see that? Cement and steel. Perfect. Now they have given you something about this. Students, they have here there's a factory building. Okay. They have a factory building. Then they have the plant in this context. Then they have got a furniture. Okay. Now here, students, plant general I'm writing. Students, plant general. Okay. Here it is building again. Here it is motor car. Fine. Then thereafter, students, one more thing, students, can you write? I just remove the furniture, this particular thing. Okay, furniture is fine. Building, motor car, put general plant, solar plant. And finally, it is after solar plant, you can just write aeroplanes. So you can just write aeroplane. So I'm just making a very comprehensive, students, very, very comprehensive this thing. And just keep your calculators ready, yeah, students. I would want your support at some point of time in terms of the calculation. So solar plant and say solar plant and say aeroplane. It's a Reliance kind of a company. Now, with that particular proposition, all of you, please have a look. This is one, I'm in the bracket, I'm writing 1, and here I'm writing 10 lakhs. In the bracket is the number of unit. In the bracket, students, it is nothing but the number of unit. This particular part, here it is, say, general plant 2, the total value is, say, 20 lakhs. Furniture 1, say 5 lakhs. Okay, 5 lakhs. These are the opening WDV, opening figure. Here it is, students, building, again, this is 2, 40 lakhs. Say 1, it is 10 lakhs. General plant 2, 10 lakhs. This is the opening WDV, students, we are talking about it. Okay. These are the opening WDV. I'm just making one comprehensive thing so that multiple concepts get covered and I don't have to keep writing different examples for different concepts. So in one go only, I'm just trying to make those all the concepts so that your revision would be easier. Solar plant, students, in solar plant, say solar plant, again, say 1 unit and 20 lakhs. Aeroplane 1, say 80 lakhs. Aeroplane, again, 1 unit and the value is 80 lakhs. The value shows this 80 lakhs. Is that point clear to all of you, students? So now if you're done with this one, over here, there is no addition per se. Students, there is no addition per se. However, less money payable has happened. Money payable has happened, students. And money payable has happened over here. There is one motor car which was there. He got a good deal, students. And 15 lakhs, that one particular motor car which was there, he got a good deal and accordingly 15 lakh was the amount at which he sold the motor car. Money payable for that one motor car, 15 lakhs he has sold the motor car, students. Every one of you have copied down up till here. So my question is now getting ready. Students. So therefore the question to all of you and every one of you have to answer it. This is the reason why I made you read everything. We have discussed the rates and all. So my question to all of you is, get ready, students. How many blocks that A Limited will prepare? This is the question. How many blocks that A Limited will prepare? This is a question. Again, I repeat. How many blocks that A Limited will prepare? Quickly. All of you have already copied. No? The case study has been copied. So the question is ready. You need to answer it, students. How many blocks that the A Limited will prepare? Students, quickly, you need to answer this particular part. Think over it. Not an issue. I give you 30 seconds. But you need to answer. Every one of you will have to answer. Whether it is wrong or right, no relevance. But just you need to make an attempt now. Radha, how many number of block you will prepare? Radha, only, can you explain this? Why you say so? What is block, students? Again, come back. What is a block? Block is nothing but primarily the class of asset having the same rate of depreciation. What are the class? Plant. In the tangible asset, there are 3 classes. Plant and machinery, furniture and fixture, and the furniture and fittings, and the building. Now, within each class, you have to see what if the common rate of depreciation, and of all the common rate of depreciation, you will make one block for that. For all that common rate of depreciation, you will make one block for that. So that is how the blocks will be prepared. So I am getting the answer is 2, 5 and 8. And that exactly is the point, students. So now be very, very careful, students. Be very careful over here. So over here, in this case, be careful now, students. Pay attention to this particular part. So the number of block, primary, now 8 block, I know what the things would have gone. Building, students, is a separate block, is a separate class of asset. And if the question is salary, it is 10%. Separate class of asset. Building is separate class. Plant is also a separate class and furniture is also a separate class. So 3 blocks I am getting it over from here only. The 3 blocks I am getting it from here only. Isn't it? Then thereafter, primary in this case. Kanaya, in your answer, what you have done, this is exactly, I know where the conceptual fallacy has arisen. Now, what you have done, Kanaya, is that you have added then 5, 6, 7, and 8, like that. 5, 6, 7, and 8. And that is not a correct particular way in this context. So, therefore, this was an important step where we have to take a pause. First, Muskan, your particular number needs to be tested. That is 5 that you have said. We'll test it. For students. Now answer me this. This is a very important stage of the discussion of your direct tax law. A most important particular concept, students, that is going to be unraveled. Are you ready for this? Perfect. So tell me then in that case, students, the depreciation allowance that you are giving, the allowance for the depreciation is an allowance that you give to the source or to the SSC. The allowance of depreciation that you give, do you give it to the source? Or that means to say to the business, or the depreciation allowance is given to the SSC. To whom you give the depreciation allowance? Is it to the business or it is to the SSC? And the answer is, be careful. The depreciation allowance is given to whom? To the SSC and not to the business. And not to the business. Be careful. Please pay attention now what I'm saying. This A Limited has got 2 distinct business. One is the steel, another is cement. Do you know what he is going to do? This A Limited, students, he is going to prepare 2 PGBP. 2 source. So 2 computation of profit and gains from business and profession. Possible that in one of these source, say for example in cement, he has got a loss. That loss he may set off from the other business. We all are aware. Intra-head adjustment. This is known as what? Popularly intra-head adjustment. Do you all agree? Yes. So they may do the intra-head adjustment and they may do the set off. So you will compute for each source the business computed PGBP will be computed separately. How about the depreciation in this case? Is the depreciation given to the source or it is given to the SSE? It is not given to the source. It is given to the SSE. I can in fact now start putting across this. Tell me the condition of depreciation. Tell me the condition of depreciation. The condition of depreciation is the ownership. So therefore, the deduction of depreciation allowance is given to the owner of the business who is using the eligible asset for the purpose of his business and profession. So ownership becomes the criteria, again attached to the SSC. There is a definition of actual cost. We will see, in fact, in today's after the break, actual cost concept will come. They say the definition of actual cost is, actual cost means actual cost to the SSC as reduced by following. The definition is actual cost of asset means the actual cost of asset to the assessee as reduced by the following. In the format of block, they say depreciation which is allowed to the assessee. So therefore, the entire gamut of provision, if you think, they are not saying clear. This is not the sentence that they use. Students, be careful. They don't say that the deduction of depreciation is not to the source, it is to the assessee. They will never say like that. You need to understand the framing of the languages and just see where it is going. Ownership, actual cost to the assessee, depreciation allowed to the assessee. All these language tells you what? That the allowance of depreciation is to whom? To the assessee and not to the business. And one more very big hint I'm telling you, students. One more very big hint I'm telling you. Recall your interest here. Tell me one thing. You claim depreciation separately. All the other deductions you claim separately. If supposingly the depreciation cannot be absorbed fully, students, if supposingly the depreciation allowance cannot be absorbed fully, then what happens? You will carry over the depreciation allowance, unabsorbed depreciation, isn't it? Now, unabsorbed depreciation in the subsequent year, you will set off separately, so on and so forth. What about a business loss, students? What about a business loss? Business loss is adjusted separately. If the business loss could not be adjusted completely, then you will carry over. You will carry over the business loss, students. Do you all agree? And once you carry over the business loss, again, then there is a time limit, 8 years time limit. The distinction is very clear. The allowance of depreciation is not on the source, it is to the assessee. So till the time the assessee continues, the deduction continues. Whereas for the purpose of business loss, the 8 years capping is given, the deduction or the set off of business loss is given to the source. In fact, students, one thing you should be very clear, only in the first year they make an exception. Now please understand, only in the first year they make an exception. And what is the exception they make? In the first year, they make an exception to provide you an inter-head adjustment. Otherwise, it is a source base. It is completely about the source. But in the first year, for some loss, they make an exception and they give you the inter-head adjustment. They make what? Inter-head adjustment. Otherwise, it is a source-based concept. What about depreciation? What about depreciation, friends? Is a depreciation, if it remain unabsorbed, tell me one thing, in the subsequent year also, whether you will restrict the depreciation unabsorbed only to the particular source, or you will keep on adjusting the unabsorbed depreciation from the other heads also. What you're going to do? Will you keep on adjusting the unabsorbed depreciation from the other heads? Answer is yes, except salary. That is what you all do. Why? Because UAD is not confined to a source. It is to the assessee. Whereas all the other losses or deductions are source based and therefore confined to the source. In some limited cases, exceptions are being made, and exceptions are being made where inter-head adjustments are being given. I hope that all of you are clear with this one. Eye opener, isn't it, students? This is the depth in which the things are there in this context. You will ensure, students, always revise this very subtle, very finer granular concept that we have discussed just now. So if depreciation allowance is that of the assessee, if it is not on the source, the allowance of depreciation is on the assessee. So the block also, Karaya, the block also you are going to prepare. For whom you are going to prepare the block? For source or for assessee? Rather, it is for the assessee. Muskan, that 5 I'm yet to test right now. Okay, let me see whether it is 5 or not. So now we have For SSC, we will prepare a block. So building, students, building will be your one block. Building will be your one single block. This is how you will prepare your block. So the block building, now you tell me one thing. In this case, let's prepare the block building. So now you tell me, students, block building, block 1, building. In this case, what is the rate? 10%. 10% is the rate, students. So how you are going to go about it? Opening WDV. What is the opening WDV, students, over here? What is the opening WDV, students? Quickly. Indeed, 50 lakhs. Three. How many assets? 3 assets. 1 in cement, 2 in steel. So 50 lakh, students. So opening WDV. Is there any additions? No. Additions is nil. Money payable is also nil. So additions or money payable is also nil. So therefore 50 lakhs is your closing WDV before depreciation. Yes, this is a closing WDV before depreciation. I hope that all of you are clear. And from this you will reduce, students, depreciation at the rate of 10%. This is 5 lakhs. Next year opening WDV 45 lakhs. Next year opening WDV 45 lakhs. Building is done. Tell me for plant now, students. Plant now in this plant, students. Plant as a class of asset. If you see class of asset, is this a plant? Yes, this is a plant. Is motor car also falling under the plant? Yes, general rate 15%. That is under the plant. See, there are only 3 class of tangible asset. One is building, another is furniture, and third one is your plant. You have to see within all these eligible asset, family, which category you belong to. That is what you have to see. So tell me, motor car which fall under which category? The general category of plant. And therefore, this also is under general category. So there's second. Then there is a general plant also. In this case, so this is 15%. For Ola Uber company students, tell me, Ola Uber company, if they also have a fleet of motor car. Ola Uber company students, they also are having a fleet of motor car. Reliance Industries are also having a fleet of motor car. So at what rate the depreciation would be given to Reliance, and at what rate the depreciation would be given to Ola Uber? So for Ola Uber students, the general rate is 30% because they are in the business of that particular flying, passenger transport service. So therefore 30% is the rate for them, and for Reliance, the general rate of 15% is what is applicable. Now over here, students, 15. So this is the plant. Yes, 15%. The general plant, 15%. Now solar and aeroplane is also a plant, but this plant will go at what percent? 40%, students. Solar and aeroplane students, plant and aeroplane students, solar plant and aeroplanes, this will go at 40%. Is that point clear to all of you? Every one of you, students, everyone. And that exactly the point. Now you tell me, Kanaya, I hope that you would be aware of it in this case now. So plant, if you see that way, primarily, how many plants at 15%? How many plant at 15%? This is how you have to ask the question. So block plant at 15%. How many of them are there? Opening WDV students, how many of them are there? Here, general plant from cement division. From general plant from cement division students, it is 20 lakhs. Then motor car from steel division, 10 lakhs. So 20 plus 10, 30. The general plant from steel division, again 10, 40 lakhs. So 40 lakhs is primarily the plant. And by the way, what is the total count of the asset? How many count? 2 here, 1 from motor car and 2 from general. So in all, how much? 5. Opening WDV, total 5 assets. And what is the amount? Amount is 40 lakhs. Amount is 40 lakhs. Is there any additions made so far as this plant of 15% is concerned? Is there any additions that has been made? Answer is no. No addition, students, in this case context. And therefore, 40 lakhs is this. And then, do you have any money payable? Yes. Students, money payable is there. One motor car has been sold. And then you get how much? 15 lakhs. And then, students, you have a closing WDV before depreciation. How much is the amount? 25 lakhs. 25 lakhs. So 25 lakhs is the closing WDV, students, before depreciation. Of this, less depreciation allowance. How much depreciation? At the rate of 15%. I hope that now all of you are clear with this one. At 15% depreciation. And then you will get the next year depreciation allowance. Next year, students, you will get this particular part. Is that point clear to all of you? Now then there is one more plant. Plant at 40%. Plant at 40%. Now, plant at 40%, students, what do you get? You are getting this solar panel 20 lakhs and this aeroplane 80 lakhs. So, how much opening WDV? 80 plus 20, 1 crore. And what is the total value? Value is 1 crore. How many units? 2 units. One is solar panel, one is the aeroplane. So, your opening WDV becomes how much? Opening WDV, students, becomes 1 crore. Do you all agree to this one, students? Now, do you have any addition during the year? No additions. No additions. So this also remains 1 crore. Is there any money payable for this category? Do you have any money payable for this category? No. So what becomes your closing WDV before depreciation? Again, 1 CR. Closing WDV before depreciation, students, in this case becomes 1 CR, and then finally, students, depreciation at the rate of 15%, which is how much? 15 lakhs. And the last block, so this was block 1, block 2, block 3, and the last block number 4 is a furniture, which is a separate class of asset, isn't it? The only challenge was plant. Plant as a class. You find two categories, one at 15%, another at 40%. And in that 15%, there were consolidation. In that 40%, there were two consolidation that took place. Isn't it? And that is how the things should be considered. Furniture, block number 4 at 10%. Please don't merge furniture with building, students. Don't make this blunder. They are separate category. Even though they may be same rate, but they are of separate category. Am I clear to all of you, students? Any doubt, students? If it is there, please ask and clarify over here only. So, by the way, in this case, 4 categories. Muskan? You have got 4 categories it is. I hope that all of you have got hold of it. Every one of you. How much have written? Oh, sorry. Just do this correction, students. Anyway, correction. Yeah. Not for 50. This is 40%, students. Please make this 40%. Students, make this 40%. Then block 40 lakhs. Furniture I am not doing, you are aware of furniture. Fine, students. Everyone clear now? Confirm, students, only when you are confirming that I am proceeding. Now further. Kariya. Only once now you confirm that I shall proceed. Students, this is what it is. After that, I'm going to give you a note below that. I hope that you have taken the example, isn't it? Have you all taken the examples? Students, so therefore, 4 blocks, and how you prepared, I have already told you. Radha, please take a note, students. Below that only you will have to write a note. The depreciation allowance. The depreciation allowance. Okay. Okay. The depreciation allowance is provided The depreciation allowance is provided to the SSC, and not to the source. To the SSC and not to the source. Therefore, the block shall be prepared. The block shall be prepared for the SSC, and not for the business or the source. Not for the business or the source. Full stop. Next line. Further, the block shall be prepared and consolidated. The block shall be prepared and consolidated for the each. The block shall be prepared and consolidated for the each of for the each class of asset and with the same qualifying rate of depreciation. And with the same qualifying rate of depreciation. With the same qualifying rate of depreciation. And the next paragraph, last. In the tangible asset category, there are three classes of asset. And in the intangible asset category, it is restricted only to one class. It is restricted only to one class or one category. So intangible, which means intangible, you will make only one block. 25% is the rate for everyone, isn't it? Now students, just pay attention. Next line you write, in the above case, the PGBP for tax year 26-27 shall be calculated for each source separately. Full stop. Next line. The computation of total income for A Limited will be as enter. Now, friends, how he is going to compute? Please have a look, friends, over here. So you know he makes, there are three columns. So this is a kind of a question or a combination when the SSE has got two business. Now, students, please pay attention what I'm saying. Huh? If you see the examination questions, generally it has been found that the question is only on one business. Net profit is this much, and accordingly, they will tell you that these are the adjustments to be made. But sometime you find that very few, you'll also find that there are two particular distinct business for which you have been given separate data, for which truths you have been given separate data. If this is the nature of the question, if this is the nature of the question, students, then you will have to compute the PGBP for each business separately. PGBP for each business separately. Otherwise, think logically, students, how you are going to get the set of provision applicable if you don't compute separately. So therefore, PGBP, if you want to, primarily in this case, if you have got data in the question for each business separately, it means that you will have to then compute the business income separately. So here, students, this is how it will look like. Particulars, amount and amount. So the tax year, in this case, 2026-27. Tax year is 26-27. Now over here, if you see, say steel division. So in this case, PGBP. So when you prepare PGBP, steel division, we computed. So computed separately, students, means net profit of steel division. Then all the add and less under the head PGBP 26 to section 60. 26 to section 60, students, all the add and less will take place in the steel division, and that is the computed PG profit. That is what you're going to show. After that, students, you have got cement division. After that, you have a cement division. Again, the same thing, students, computed part is what you're going to take. Thereafter, students, you will take what? The gross amount. And after taking the gross amount, students, after taking the gross amount, then you will reduce. Reduce what? The current year depreciation, students. The current year depreciation that you have computed just now as per the working note. So that is what you have worked out right now. So that is what you're going to reduce. And after that, students, as you know, in this case, say herein, you will also get what? The brought forward business laws. Don't forget. This is the hierarchy. The brought forward business laws. And finally, students, you will have what? You will have the unabsorbed depreciation after brought forward business laws, unabsorbed depreciation, UAD. And this is what finally will give you PGBP. This you will take into the outer column. This you will take to the outer column. And say, for example, he may have capital gains. Just if you are doing it, say he may have IFOS. Take it to the outer column. This will give you what? GTI. This is nothing but your GTI. GTI. Then let's what? Chapter 8. Deduction. Chapter 8 deduction, students. So visualize your question number 1. Chapter 8 deduction, reduce this, and finally you'll get what? The total income. This is your goal, and this is what the chargeability is on, the total income of the tax year. The total income of the tax year of a person. So can you see outer column? The outer column is for the person. Ultimately, this is for the person. Inner column is for the source. So this is why, therefore, the format that you prepare, we can say, students, these formats are not a casual format. Total income, this is where section 4 finally get crystallized. Total income. Outer column of your format is for the SSE. Inner column is to the source. And finally, the total income, which you compute, finally, that is what is charged to whom? To the SSE. Total income of a person for tax year. Total income of person. They don't say total income of PGBP. They say total income of person. So source wise, inner column, outer column, it is the SSC that comes. I hope that all of you are clear with this one. Every one of you. In fact, students, technically speaking, the current day depreciation you could adjust on the order column also. That you can also do this. Depreciations and all, you can do it on the order column also. Not an issue. Now, students, with that, we are done with this. So, we are done with the eligible asset and the rate of depreciation. I hope that every one of you are clear with this one. Every one of you. With that, students, now we are left with the last concept in this case. Tangible asset has three categories as such, or more is rather categories. There are three class of asset. Okay. Now, in my example, if you see, plant and machinery is one class. But in that one class, there can be multiple block, which we have seen for plant. Plant is only one class. Agree? But that one class can have multiple block. How? If you have got in that class assets having different rate of depreciation. If you have got assets having different rate of depreciation. So in the case of plant, you have motor car also. You have solar panel also. You have computer also. But is it that motor car or general plant or aeroplane or computers, are they say at the same rate? No. So if there is a distinct rate, that distinct rate will have the distinct particular blocks, and you have to consolidate. So whatever are the common rate in that category, whatever are the common rate of asset in that category, common rate of asset in that category, those common rate of asset in that category, you will have to consolidate. Is that now clear to all of you students? Everyone? Confirm once. We are done with this particular part, students. In fact, no, if I have made you write three class of tangible asset, that is true, that is true. Three class of tangible assets, which is plant, building, and this. But that is not three blocks. I never told you it is a three block. I told you that the block is prepared on the basis of the class and the rate, common rate. So there are three class. That does not mean there are three blocks. Block depends upon for each class if they have got multiple rate. So for each particular rate, you will have separate blocks. The way we have discussed in this particular question. I hope that every one of you are clear. Students, now the next concept as we have in the checklist is the last concept. In fact, I have done the hierarchy. In this particular example, students, I have also concluded the last item. What is the last item? The hierarchy. What is the hierarchy? Current depreciation, then the brought forward business loss, and then the UAD. That hierarchy is also covered. So now what is left now is that conditions. So maybe 10 minutes break. I think the new concept will just take across after the break. Okay. The ownership particular part will take in the after the break. 10 minutes break maximum. Perfect students. Then we will complete the ownership and then we'll come to the actual cost. That concept. संकेत जी ब्रेक ले लेते हैं 10 मिनट का. I think 7:25 students, so 7:35. Perfect, 7:35. So now, friends, coming back on this particular concept of ownership. So we are now on the last category of part A. So just come back, friends. So we are done with basis of depreciation, eligible assets, and the rate of depreciation is what we discussed. Now the concept is of the ownership of the asset, students. Now just be very careful about this particular part, students, over here. Just a second. Now, ownership, students, there is a landmark judgment of Mysore Minerals Limited Supreme Court judgment, students. Now, even on this, see, in the examination, students, they keep asking this questions again and again, and you will find it in the question number one only, but like in the form of an adjustments. Like what? In the form of what? An adjustments. So the landmark judgment in this proposition is that of Mysore Mineral Mill Limited. All the module page numbering, students, any case I told you has been given to you. But those facts are given here. I don't think that if you will require some clarity, then you may refer the module. Obviously, that is the very purpose. But I do think that these things are very much made clear to you. So your revision also becomes faster with the practical questions which are there in these notes. So the notes has its own practical particular question. So that way it will also enable that these notes will facilitate your last day's revision, the last during the course of your examination. So therefore the revision also becomes very fast and they are backed with the practical questions, examples, and everything. Are you getting this one, students? So that is the very purpose. So now coming on this particular part of Mysore Minerals Limited, students. What has happened is this that I'll just modify. So the state government, as you know, they are running the buses. So they are running the buses. So they have, after some years of the buses in operation, they sold the buses to its corporation, to corporations, second-hand buses. All the ST buses that we see in the city, in the state, that belongs to the government. So what happened was that after some year, they sold those second-hand buses. Now, obviously, now it is second-hand. So they sold the buses to the corporation. And then the state government did the registration of those buses. As you may be aware, students, that the registration is a very cumbersome exercise. Do you all agree to this one? Registration of the buses, second-hand buses. The second-hand buses probably becomes very cumbersome exercise. So therefore, what happened was that they didn't did the registration of the bus. So they failed to do the registration in that case. So without registration, students, without registration, the buses were being sold. Without registration, the buses were being sold. So the the title was with the government only. The document evidence was with the government only. Now the SSE who bought the buses, the SSE who bought the buses, although the registration didn't happen, the SSE students, the SSE was claiming the depreciation in this regard. The SSE was claiming the depreciation on those buses. A department disallowed the allowance of depreciation, stating that you are not the owner, the asset is not registered in your name, and because you are not owner and the asset is not registered in your name, therefore the claim of depreciation will not be allowed to you. At that point of time, students, the Supreme Court in this landmark judgment has held what, students? So here, in this case, what is required? Anyone who is in the possession of the property in his own, so any person who acquires, who just write like this, who acquires and possess the property property, uses the same for the purpose, uses the same for the purpose of his business and profession. Without, without, without or to the exclusion of other person. This is what is a test. Who acquires and who possess the property. They are all plus reference. Who has acquired and who has possessed the property, who is using the same for the purpose of his business, for the purpose of his business profession, to the exclusion of the other person. What do you mean by to the exclusion of the other person? Other person does not have any, they don't have any control or any right over that particular property. So if another person, if they don't have any control or any right on that particular property, we can say that the assessee is the owner of the property. Reason being, he has acquired the property, he is possessing the property, and he is using the same for the purpose of his business and profession. He is using the same for the purpose of his business profession to the exclusion of the other person. Always keep this point in mind. And if this is what is there, then whether registration has taken place or not, all these concepts will become irrelevant. Whether the registrations, title transfer, those things has happened or not, these concepts, students, will become irrelevant. This is what we need to see. This is also another word that they use frequently. Another word, students, that they use frequently for this is also beneficial ownership. Another word, students, that they use frequently for this is what? Beneficial ownership. This is the another term which is very popularly used. Beneficial ownership. So if I'm using to the just simple word, students, if I'm using the asset to the exclusion of the other person doesn't have any right or control over this particular property, then I being the person who is using on my own right to the exclusion of the other person, I am the one who is said to be the owner of the property. Is that point clear to all of you, students? If this principle is clear, students, you may in fact take some examples. Just quickly, I'll just give you some examples which are covered over here also. One of the examples, students, is like, for example, partnership firm. The asset, students, was of the partnership firm. The asset was of the partnership firm. So asset was belonging to the partnership firm. One of the partner, students, one of the partner retired. And to settle his dues, the partnership firm, to settle his dues, students, the partnership firm has given one of its asset to that outgoing partner. One of its asset to whom? To the outgoing partner that the partnership firm has given its asset. Question therefore was, students, now the asset continues to be registered in the name of the firm. It wasn't registered in the name of the partner. The partner retired. To settle his dues, the firm has given that asset. Now, what the partner was doing post-retirement, students, the partner was using the asset for the purpose of his business and profession. Using the asset for the purpose of business and profession. Question therefore came that whether the partner will he be eligible for the depreciation in respect of that asset that is using that he is using for the purpose of his business. Although the title continues to be that of the partnership firm. The title over the asset continues to be that of the partnership firm. Please tell me, students, what is your take? What is your take, students, in this case? Now, all of you are aware of the principle, na? So, what is your take? Whether in this particular case, which question? Rather, I am not aware. Whether in this question, whether in this context, students, whether in this context, the partnership firm who has the title over the property, but the asset is now being used by the partner for his own business after the retirement, whether the partner will he be eligible to claim the depreciation allowance in this particular case or not. And yes, indeed, partner is the beneficial owner, students. The partner is the beneficial owner. All of you agree to this one? Yes, indeed. And why do we say so? Why the partner is the beneficial owner, students? The partner is the beneficial owner because, now tell me one thing. He is possessing their property. He is using it for the purpose of his business and profession to the exclusion of the other person. Now, please tell me, Muskan, here, Kanaya, the other person that we are talking in this example is who? Partnership firm. So partner, he is using this asset for the purpose of his business. He is possessing the asset to the exclusion of the other person. Who is the other person in this case, students? Who is the other person in this case? Indeed, the other person is partnership firm. Excellent. Excellent. Very good, students. Excellent. You have got hold with the concept now. Very good. The other person is partnership firm. Does partnership firm now are having any particular, students, does partnership firm now has got any particular right over the asset? Answer is no. They have not given the asset on loan that they are going to take it back. Did they give this asset on loan that they are going to take it back? No. And that is the reason why they have not given the asset on loan that they will take up back. They have given up their right. Please, you understand. They have given up what? Their right. Because our next topic, students, would be capital gains. At that point of time, giving up the right, loan and all. Understand these nuances. Try to appreciate these finer granules. And therefore, over here we say that the firm has given up their right. And by giving up the right, primarily the partner have become what? He is possessing the asset in exclusive manner. Exclusivity now is with the partner who is using the asset to the exclusion of the partnership firm. Excellent, students. Very, very good. Quite impressed. Now, students, in this regard, in this context, perfect. Now, students, in this context, there are some couple of more situations in the module. We will cover it up. I think that you should now be in a position to answer it also because you have got hold with the principle. Students, be careful. Let me first explain this concept. I think in your accountancy or accounting standard, in the case of a lease, you have two things. One is a finance lease and another is the operating lease. All of you are aware of it, isn't it? One is the finance lease and another is the operating lease. That every one of you are aware of it. Now, so far as the finance lease and operating lease is concerned, students, in this case, operating lease, what is the fundamental difference? Operating lease, students, in this case, it is for a very lesser period. Finance lease is for a larger period. Generally, the larger period sometimes is equivalent to the economic life of the asset. Is generally sometimes in some cases equivalent to the economic life of the asset. And one of the feature in the finance lease is that somewhere towards the end of the lease period, the lessee is given an option to acquire the asset. The lessee, students, is given the option to acquire the asset. That is the feature of the finance lease. All of you agree to this one? And that exactly is the point. Now, students, in this particular case, if you see, as far as your accounting standards are concerned, in the case of operating lease, it is lesser who is the one who claims the depreciation. But when it comes to finance lease, if you see in your accounting standards, I think it is the lessee. In days also, finance lease, it is a lessee which is the one who is eligible to claim the depreciation. That is what students we will understand by the accounting standards and all. But when it comes to income tax law, primarily income tax law talks about ownership. For the purpose of claim of depreciation, they talks about ownership. And when they talk about ownership, what they say, once in the finance lease also they will ask the same question, that if supposingly, be careful to know, if supposingly in this case, if supposingly students, in this case, this is a lease period. So if this is the lease period, finance lease, a bigger period, an option is given somewhere here. Option to acquire the asset is given somewhere here. Tell me one thing, students, over here. Till the time the option is exercised, till the time the option is exercised by the lessee, who has the control over the asset? Till the time the option is exercised by the lessee, who has the control over the asset? The lessor continues to exercise the control over the asset. And why I say so? If he wants, the lessor can somewhere in between cancel the lease deed, pay some compensation to the lessee, pay some compensation to the lessee, and take the asset back. So here we see that till the time the option of acquiring the asset is exercised by the lessee, it is a lessor who has the overall control over the asset. He is having the overall control over the asset, and because he is having the overall control or the larger control over the asset, we will say what? That the lessor is the one under the income tax law who will be eligible to claim the depreciation on the leased asset. But somebody will say, sir, but he is not using for the business, he is not using for his business. You need to ask the question, what is his business? His business is to give the asset on lease. And if his business is to give the asset on lease, he definitely has exercised. He is definitely has exercised what? He is using the asset for his business. And what is his business? To give the asset on lease. So definitely we will have to say that because his business is that of giving the asset on lease, he is very much using the asset for the purpose of his business. He is very much using the asset for the purpose of his business. And that exactly the point. But once students, the lessee acquires the option, at this stage, the lessee exercises the option and he acquires it. Then what happens? Then whether the lessor will have any control over the asset? Answer is no. Lessee has acquired it. And therefore now lessor does not have any control over the asset. And at that point onwards, it is the lessee who will be said to be the owner. And once the lessee is the owner, a lessee will be eligible to claim the depreciation. Lessee will be eligible to claim the depreciation. I hope that every one of you are clear with this one. Similarly, students, in fact, in this case, so over here, students, please write in the case of leased asset, just students write leased asset. I think this particular part already you have copied, isn't it? This test of Mysore Minerals Limited. It is already there, leased asset. This thing it is there, but still, just one test, one liner. I just want you to write. In the case of a finance lease, in the case of the finance lease, the lessor under the income tax law, the lessor under the income tax law is eligible to claim is eligible to claim the depreciation is eligible to claim the depreciation till the time till the time the lessee exercises till the time the lessee exercises the option to acquire the asset. To acquire the asset. In the bracket, right, students? Which generally happens, which generally happens towards the end of towards the end of the lease period. Fine, students. Perfect. Now, students, if you see, just have a look over here. Now, lease point is clear to all of you, students? Every one of you? Now, just have a look over here, students. In the case of the building, students, be careful of what I'm saying now. Students, just be very careful now. What I'm going to discuss. In the case of, students, in the case of in the case of, students, in the case of what? Many of you are aware that the land which is there are two types of land, freehold land and leasehold land. Maximum of the land in the city area are leasehold land only. Maximum land in the city area are leasehold land. Very hardly few of the territory are freehold land. So now what happens? The buildings are being constructed on the leasehold land. The buildings are being constructed on the leasehold land. Question therefore is, students, if the building is constructed on a leasehold land, just imagine this, students, in this case, the lessor, who is the lessor of the land, the lessor of the land continues to exercise the larger right on the land. Do you all agree? The lessor of the land exercise the larger right. Like say for example, tomorrow 50 years of lease, he has given the land on lease 50 years. Just think over it. 50 years is a lease period. Say after the expiry of 50 years, he does not want to renew the lease. You may have incurred the construction cost of building because you have constructed the building for your office purpose, but that construction of building you did on the lease or land. Lease period of the land was say 50 years. After 50 years, that person is not renewing the lease. The government is not renewing the lease. So what will happen? You will say that fine. Will you say, okay, fine. You take your land, I take my building. I'll cut the building and I'll paste it somewhere else. Can you do that? Answer is no. You have to leave your building lock, stock, barrel. As it is, where it is basis, you have to just leave your building because the lease is not renewed. And that's a game. So therefore, if supposingly, if you are a person who has constructed the building on a leasehold land, you cannot say that even though you may have incurred the expenditure, you cannot say what? You cannot say that you still have what? The larger right over the building. No, the one who is the lesser of the land, the one who is the lesser of the land, he is the one who is having the larger right over the building. Do you all agree? He may not renew the lease. Your building, you have to leave the building altogether. In this case. And the government came to know that this is a real problem in the economy. People are acquiring the building where on a leasehold land. People are acquiring the building, students, on a leasehold land. And if we don't give them the benefit of depreciation allowance, if we don't give them the benefit of depreciation allowance, then there would be very few people who would seek to own the buildings. It will have a very damaging effect on a real estate sector. And hence, to cater this dilemma, they have created what, students? A provision. See the provision, students, what they've done. See the provision, students, in this context. Please have a look, students. The provision itself. Can you see this? Capital expenditure on leasehold building, 33.6. What they say? Where the business or profession of the SSC is carried on in a building not owned by him. Technically speaking, can we say, just in a simple word, you can just say, write in your notebook, section 33, subsection 6, leasehold building. Building constructed on a leasehold land. Building constructed on a leasehold land. Building constructed on a leasehold land. So what it says, where the business or profession of the SSC is carried on in a building not owned by him. Why he is not owning the building? Because it is constructed on a leasehold land. If the land is on lease, automatically the building comes under the lease because the building is attached with the land. But in respect of which he holds a lease, obviously he is holding the lease, na? Or other right of occupancy, and this is the condition, he has incurred construction cost. He has incurred the construction cost, and any capital expenditure is incurred by him. So he has incurred the capex. In this case, then the depreciation is allowed as if what? As if the said structure where the building owned by him. So as if means, what do you mean by the term as if? As if means, students, the deeming provision. So this is the case of a deemed owner. So if somebody asks you, do we have a concept of deemed owner under depreciation? Do we have the concept of deemed owner under the head for depreciation? This is a concept. Why? He is actually a lessee of the building, even though he may have incurred the cost of construction of building. The fact that the building is attached to the land is a leasehold land. What happens in this case? The control, therefore, on the building is that of the owner of the land. He is the one who's controlling the. But I am the one who has incurred the expenditure of construction or purchase. So who should be the one? As per this provision, as per section 33 subsection 6, they say that the one who is the lessee of the building, but at the same time, most important condition, he should have incurred the expenditure, capex, capital expenditure for purchase or construction of the building on that leasehold land. Then, as per 33 subsection 6, he will be considered as deemed owner. And if he is considered as deemed owner, students, will he be eligible to claim the depreciation? And the answer is yes. And the answer is yes. Fine, students. But students, just have a look to BOT roads. What is BOT road? Build, operate, transfer. Even this example, these are the examples, various situations. Students, ICAI has, in the module, they have covered various situations. Now they are talking about build, operate, and transfer kind of a road. You remember these roads which are there? Highways and all. You build the highways, you operate the highways, say, for 10-15 years, so that your cost of building is recovered. At the same time, what you also earn some nominal profit. At the same time, you also earn some nominal profit, isn't it? That is known as build, operate, transfer. Now, in that case, the assessee who is under the build, operate, transfer model, does he have any right? You can say, I have the right till 15 years. You don't have the right in this case. The government may give you a lump sum compensation in between and can throw you out. The control is still with the government. Yeah, government has said that, like, for example, 15 years, we have given it to you so that you can earn from this particular thing and recover your cost and make some reasonable profit. That is what is the entire concept. But to say that I am the owner of this particular infrastructure, To say that I am the owner of that particular infrastructure, students, that is an incorrect particular statement. And therefore, such SSE who has got the license for this BOT model or for the infrastructure project, they cannot be considered to be the owner, and accordingly, they will not be eligible for any depreciation allowance. Is that point clear to all of you, students? If that is the case, with the last particular point which has been there is the hire purchase. The last special case, lease, we have done it. This case of Supreme Court is on that same lease concept which I taught you, ownership lease. The last concept, students, is that of the hire purchase. Let me see. Hire purchase, students. See here. In the case of hire purchase, students, the question therefore is, who is the one in the hire purchase agreement? In the hire purchase agreement, students, again the same question arises. I think all of you are aware of the hire purchase. What happens in the case of hire purchase? I purchase the asset. I have to keep on paying the installments, isn't it? And if I don't pay any installment, then the person, the supplier or the vendor, will primarily can seize that asset back to him. That is what is the general criteria. And finally, when you pay the last installment, at the payment of the last installment, that the title transfer take place. All of you are aware of it. That the payment of the last installment, that the title transfer is taking place. This is what is the last particular case. The title transfer take place on the payment of the last installment. So now again the question is, students, now be careful. In this hire purchase particular model, who is the one who is eligible to claim the depreciation? In the case of this hire purchase model, students, who is the one who is eligible to claim the depreciation? Whether the buyer, if that buyer, he has purchased the asset on hire purchase primarily, and he is using the asset for the purpose of his business and profession. He is using the asset for the purpose of his business and profession, whether the buyer can he claim the benefit of depreciation. Now let me ask you this question. Please pay attention to my question on this part. Students, if the buyer is paying the installment regularly, tell me one thing. If the buyer is paying the installment regularly, then whether the vendor can he cancel the contract and take back the asset by paying some compensation to the buyer? Can that particular seller, can he do that? If the buyer who has purchased the asset on hire purchase, if he is paying the installment regularly, then whether the supplier or the vendor, can he cancel that particular contract, take back his asset, by giving him some compensation? Is that possible? Is that possible or not in this case? And the answer is no, students, in this regard. And the other is no. All of you agree, students? Every one of you? Muskan? Radha? Buyer cannot claim the no, that is the point. Kanaya? That is the point. Title transfer has control is the what? Ultimately, up till all the case law, be it that partnership firm, title was of partnership firm. Who was claiming depreciation? Partner. In the first example that we discussed, Mysore Minerals Mill, title was with whom? With the government. Who was claiming depreciation? The corporation, which were using the second-hand buses because they have acquired, used to the exclusion of the other person. And the last particular category, you talk about the lease. Now, many students are comparing, sir, with lease and hire purchase. Please understand, in the case of hire purchase, if I am giving the installment to you regularly, you cannot take back this asset at any point of time. The asset can be taken only when I stop paying you the installment. That is the time when I am my rights will get extinguished. my rights on that asset will get extinguished. But till the time I'm paying the installment, the supplier, the vendor does not have the right to take back the asset, which was not the case in the case of a lease agreement. Do you all agree to this one? In the case of a lease agreement, the situation was there. That is what it is, rather. In the case of lease agreement, students, in the case of lease agreement, what exactly happened in the lease agreement? The lessor who was there, whether it is a finance lease or it is an operating lease, even in the case of finance lease, the lessor has the larger control. I can take back the asset by giving you the compensation primarily because you haven't exercised the right to acquire. So if you haven't exercised the right to acquire, I, the lessor, has the control over that particular asset. I hope that all of you are clear with this one. Every one of you. And that exactly is the game, friends. Fine. So this is how the things has to be looked upon. I hope now all of you are clear with the concept of ownership. In the hire purchase, friends, exactly what is hire purchase? Think fundamentally. Take away the taxation part. Just think fundamentally. What exactly is hire purchase? Hire purchase is nothing but a sale agreement. Just that the supplier need to have a security because his consideration is yet to be recovered. So therefore, only for consideration part, not on the property or the title part. He is not controlling the title. He is not securing the title. The supplier is securing the consideration. The arrangement is to secure his consideration. The arrangement is not to secure the title. And that is the reason why the arrangement is made in such a way that if you don't make the payment, the asset will come back. That is what it is. But if he is making the payment of the installment, does the vendor at any point of time, can he plow back or can he take back the asset? Can he take back the asset? Answer is no. I hope that now, students, every one of you are clear with this one. With that, students, we are done with this. Now, students, I think one thing I can give it to you over here as a homework, which is students, over here. Please have a look. Use test. Students, I have already discussed the use part, the C2. Ownership after C1 was ownership. C2 is the use test. I already discussed with you this single asset use test, students. Single asset use test. Remember that? Okay, student, one thing in the rate of depreciation. Additional depreciation has been left. We have to come back. Students, tell me one thing over here. Use test, what I told you? Single asset use test only for a newly acquired asset, because the newly acquired asset will be eligible only when they enter into the block, and they will enter into the block when they are put to use. Subsequently, the block as a whole should be in use. Subsequently, the block as a whole should be in use. This is the principle that we have derived up till now. Now, what happens, students, over here is at some special point, kept ready for use, means passive use. In passive use, students, can a passive use means I am not actually using it, but it is ready for use. So, the fundamental test is put to use. What is the fundamental test? Put to use, and not merely ready for use. That is a test. So, we use the word in income tax law. The depreciation is allowed if the asset is used for the purpose of business and profession. Used for the purpose of business and profession. This is what you say, isn't it? Now, what if it is not actually in use, but it is ready for use? Whether you will be eligible for the claim of depreciation? Generally, you will say no. Unless the facts in that particular case says that ready for use is equal to use. Now, I'll give you an example. Ready for use is equal to use. Supposing, students, there is a particular factory which requires electricity supply for 24/7. You just can't have a situation where the electricity is cut off. So therefore, what happens is that the SSE has purchased many power generators in his factory. Although there is no particular power disruption that takes place in that area, although there is no such power disruption that take place in that area, but still the SSE has taken what? This particular facility. Still, the SSE has taken this facility. Which facility? The power generators. So the power generator is there inside the factory. It is not actually in use, but it is ready for use. Now you tell me in this case, can this ready for use, can this ready for use students in this case, can that be eligible for depreciation? And the answer is yes. Why? For me, power generators primarily are as good as, if it is ready for use, it is as good as they are in use. Because their role is that at any point of time, if any trip happens, immediately or instantly, they start generating the power. So therefore, even though actual usage may not have happened, the actual usage may not have happened, but what I told you, that they're ready for use is equal to use. They're ready for use is equal to use, students. Is that point clear to all of you now? Every one of you, students. And that is what it is. But generally, when you write the answer, students, in this case, you will say it is only actual use. I hope that all of you are clear with this. Only in certain facts, which will have to be established by the SSC, that the ready for use is equal to the actual use. This is the example. I give you another example. Supposedly, I purchased a particular air conditions. These air conditions were kept like a, because I was getting a good deal, buy two get one free kind of a thing. I got it. So they are kept in my factory. They are ready for use. And at any point of time, if I have to use it, I can use it. But I am not using it. So now this is also ready for use. Can it be equated as to being put to use? No. This case will not be consistent. That becomes a case-to-case specific, students. In the examination, students, you will only write and should be very clear in your language. Income tax law, use the language put to use. Okay. So some example, students, Yamaha Motors and all, that you have discussed, students, already, and that primarily covers this one. The succession, reorganization, amalgamation, demerge, students, that will come later. This particular part. In fact, in the next class, only this thing is going to come. The succession or organization, amalgamations and all. Okay. Now, to whom the depreciation allowance is made? To the SSC. Okay. Unabsorbed depreciation, student, I already gave you. And I also gave you the hierarchy. Everything, students. Characteristics of unabsorbed depreciation, students. It can be set up. Only this point, students, is most important. You just read it. It's not that you don't know. Every one of you are aware of it. It's now self-explanatory. It is now, everything is self-explanatory, just that you just read it once. Hierarchy of set-off, students. I told you already hierarchy of set-off. Hierarchy of set-off is known to you. Current year depreciation is the first item. Second is the brought forward business loss. And after that, the UAD. What is the logic? Logic I have told you. Students, one last particular point was that about the additional depreciation. The last particular point, students, if you talk about it, is about the additional depreciation. So if you can just come on that particular part. All of you. Students, additional depreciation, I think all of you are aware of it, isn't it? This part was left. I need not tell you, students, for whom it is available. Now, this is SSC is engaged in the business of manufacture, all the manufacturing. So therefore, if I am in a chartered accountant in practice, if he has purchased a new plant and machinery, will he be eligible? Answer is no. Why? Only for business of manufacture. Business of manufacture, or in the business of generation, transmission, or distribution of power. Be careful, students, over here. This SSC who are in the business of generation or transmission of power, tell me one thing. You know that for them there is an option. For them, students, there is an option that they can claim the depreciation on the basis of the SLM. Do they have the option to claim the depreciation on the basis of the SLM? Yes, they have the option, students. And if they have the option to claim the depreciation on the basis of the SLM, the next question is ready with you. Can they also claim the additional depreciation if they are in the SLM category? If they are in that SLM option. I just need to know how many of you are aware of this. These are the classic, maybe could be an MCQ target, MCQ kind of a target. Tell me quickly, students. What is the take? Whether they will be eligible for that. So be careful, students, in this case that this is not applicable when you are in the optional SLM category, which means that you have to be in the block category. So just write, students, a thumb rule, just write it in the notebook. The additional depreciation is available only under the block scheme. Please write. The additional depreciation is available only under the block scheme. If WDV there for these power generation, then no additional depreciation allowance. No, it's not about WDV. It is about when you acquire a new asset that you are eligible for additional depreciation under the block schema and provided you are in the block scheme. Now in this case, students, let's have a look again. The SSC acquires and installs the new plant and machinery. SSC is acquired or install the new plant and machinery. Third point, the new machinery or plant is first put to use by the SSC for the purpose of business. Now, students, tell me one thing. Whether building, can you claim additional depreciation on purchase or construction of a new building or a new furniture and fixture? Can you claim the additional depreciation for them? And the answer is no. It is only for the plant. But now, students, at the start of the lecture, you people have traveled to the big list of the plant, and there are multiple plant. Motor car is also a plant. Aeroplane, ship are also a plant, isn't it? So whether these particular plants are also plant in the name of motor car, plant in the name of computers, plant in the name of the aeroplanes, ship, whether they are also eligible for depreciation, additional depreciation, normal depreciation plus additional depreciation. For that, students, be careful what they have to say. Point number 4 becomes an important list for all of you. Point number 4 says to all of you over here, the new machinery or plant not being a ship or an aircraft, which means that ship and aircraft is already eliminated, negative list. So this is already a part of the negative list. And then point number A was not used either within or outside India, means second hand is also out. This second hand, point number A, is again creating another negative list. And what is it? Another negative list? The another negative list is your your second hand plant and machinery. Point number B is not installed in any office premises or residential accommodation. So office plant, office equipment like plant air conditions, all these are what? Primary, or maybe any particular office plant and office equipment, students, they are also covered in the negative list. Or maybe in the factory premises, students, in the residential accommodation in the factory, that is there like a guest house and all. So there also you may have those plant in those guest house. So whether it will be considered for additional depreciation? No, again it is in the negative list. And C, students, not in the nature of any office appliance or road transport vehicle. Students, can you see that? Road transport vehicle. So ship is gone, aeroplane is gone, road transport vehicle is gone, second hand, any plant and machinery has gone, and so what do you see? So here it is a specific asset. How to remember? These are the specific asset. This is a specific asset. This is what students, the second hand item. Point number A. Point number B, any asset, if it is installed, the location. Point number B is targeting location where it is installed. So any other plant other than the excluded category, any other plant, if they are installed in the office or guest house, then even that particular plant, because it is installed in the office or the guest house, it again would be excluded, will not be eligible for additional depreciation. What determines the specific negative list? Just like your ITC. ITC also has got the same kind of a list, isn't it? So here there are some specific exclusions of the asset, no additional depreciation. Second category is the second hand item. If it is not new, so opposite of new, second hand disqualified. Third is any other plant will be disqualified depending upon where it is used. And that again creates a disqualification. I hope that all of you are clear with this one. And the last one, students, is that if students, if on the asset for any reason on the remaining eligible plant, students, if on the remaining eligible plant after filtering point 4, whatever is that remaining plant which is left, on that remaining plant, if you have got 100% deduction, if you have got 100% deduction in any other provision, like say for example section 35, 35 AD, if you already have taken 100% deduction in any other section, then you will not be eligible for any additional depreciation on that particular asset. You would not be eligible for additional depreciation. Fine, students. Now, next point, students, as you know, 20% of the actual cost is what is the rate of additional depreciation over and above the normal rate. And if the asset is put to use for less than 180 days, then it becomes 10% of the actual cost. But be careful, 10% in the current year and the balance would be 10% in the next year. Current year 10%, next year 10%. That is how it goes. So therefore, it is not that because it is put to use for less than 180 days. So you get only 10% in the next year. Nothing. No. Next year the balance 10% is available. Now, friends, one very important particular point that you should bear it in mind. And that is about the alternate tax regime. This is what it is. Students, in fact, in the tomorrow's class, at the very start, I'll be giving one example, and in that example, this particular concept is going to be tested. So therefore, if there is an alternate tax regime, so students, what happens in the alternate tax regime, students? Do you can you get this additional depreciation allowance if you are in the alternate tax regime? Answer is no. As you may be aware, many of the provision, like for example, tea, coffee, rubber development allowance. If you remember the starting first sectoral provision out, you don't get deduction if you are in the alternate. Similarly, additional depreciation also is not allowed if you are in the alternate tax regime. I hope that all of you are clear with this one. Every one of you. Now, this is interesting, friends. This was asked in the examination. Again, in the form of adjustment. Frequently asked, friends. Again, in the form of adjustment. So, what I have done is that whatever has been asked in the examination, students, I have given in the form of adjustments. So these are the adjustments, students, just you need to know because these will come only like in your question number 1 total income. 1 points or maybe like an MCQ. So therefore you just need to be very clear about it. Frequently asked exclusion from additional depreciation. Second hand machinery, will it be eligible? No, only the normal depreciation is available. Additional depreciation not available. Installed in the office premises, residential accommodation including guest house. All these computer installed in the office because it is installed in the office or it is installed in the guest house, primarily it will not be considered for the purpose of additional depreciation. because it is installed. Where it is installed? Office, guest house. So therefore disqualified. Office appliance, road, motor vehicle, disqualified. So be careful, huh? But forklift trucks used inside a factory are eligible. This is just like your ITC chapter, students. In your ITC also, if you see, do you know what it is? Forklift trucks, the heavy duty trucks which lifts those goods and all. Is this a motor vehicle? No. This is not a motor vehicle, students. In the big factories and all, just imagine they have got those like bulldozer kind of a thing you find, which runs inside the factory. Heavy duty vehicles are there. These are primarily to lift up the load from one particular center inside the factory to another center. So if you have purchased those, then will it be eligible for the purpose of additional depreciation? And the answer is yes. It is not your road transport vehicle. So it's not a road transport vehicle, students. So that road transport vehicle versus forklift trucks are different, and therefore will they be eligible, students, for the purpose of additional depreciation? Answer is yes, it will be. 20% is the rate. I hope that all of you are clear with this one, students. Every one of you. So by this, students, we are done with the part A particular thing. So how you recall part A, students? Basis of depreciation, SLM, or the block scheme. Block, keep the format in mind. Then after that, money payable is a critical feature. Only when the money has been paid, that the asset will be out of the block. Otherwise, no. Next was, students, next part, point number B. What was point number B? Point number B was eligible asset and the rate of depreciation. Eligible asset, tangible, intangible, we have seen. In intangible, goodwill is out, primarily, and intangible, three categories of the asset. But that does not mean that you'll make three blocks. It will also depend upon the fact that in each category, if there are different rate of depreciation, if there are different asset which are eligible for different rate of depreciation, then you will have to create that much number of blocks. Block is prepared not for the business, block is prepared for the SSC. I hope that that point is very clear, because the depreciation allowance is given to the SSC. Those distinctions we have already explained now. Rate of depreciation we have seen for each of the category. We have seen what is the rate of depreciation, and I think now that's much comfortable. You have learned additional rate of depreciation. Now also you know, in the case of additional depreciation, you just need to know to whom it is applicable. That is point number one. And what is the cases where additional depreciation is not available. So to whom it is available? Manufacturer, and the second one is to the power generating unit. But for power generating unit, only when they have taken they have not taken the option of SLM, they are in the block scheme. Only then. Fine, students. Then point number C was the condition. Condition was the ownership. Ownership and the put to use criteria. Ownership and the put to use criteria. Isn't it? Ownership, Mysore Mineral, who has acquired and possess and using it for the purpose of his business to the exclusion of the other person. To the exclusion of the other person, that is the ownership criteria, family. And based on that, we have seen various situations. Put to use, already explained. Hierarchy of depreciation, you already know. Current year, after that, brought for business loss. After that, UAD. This covers your entire category A. Is that point clear to all of you students now? Part B, after that, what is there in the part B? Two things are there in part B, students. Two things are there in part B. And which are those two things? One is the concept of the actual cost. And in this actual cost, students, various ICDS is going to get pulled up. Various ICDS. Students, please confirm first, all of you. Up till now, any query that you have, please ask me right now, because in part B, it will have its own set of challenge. And please, students, since you now have the notes also, you please ensure to revise it thoroughly. And any query that you may have, please let me know. Any doubts up till now, students? Quickly. stock membership card depreciation allowance was not clear. By virtue of the membership card, rather by virtue of membership card only, I can become a stockbroker. So, and that, remember, membership, it runs in crores of rupees to become a stockbroker. So therefore, unless and until you become a membership, unless you get the membership card, you cannot enter into this business. So therefore, only these person who has got the card can do the business. So can we say this is the business or a commercial right? And if it is a business or a commercial right, it is what? It is nothing but an intangible asset, because business or commercial right is also referred as an intangible asset. Clear now? Perfect. Any other query, students? Kanaya, Muskan, any other query? Quickly, confirm quickly, students. Then we move to the next part, the concept of actual cost and the concept of WTV. Abhijit, students now. Perfect. Now all of you. Students, here in our second segment, there is one a landmark judgment of a Supreme Court, Challapalli Sugar Mills Limited. Students, tell me one thing over here. Like, for example, a particular person has purchased a plant and machinery for rupees 10 lakh from the vendor. In between, he has incurred the transportation charge, and also he has incurred towards installation. Transportation and installation is say 1 lakh each. 10 lakhs to the vendor, 1 lakh for transportation, 1 lakh to the installation. Question therefore is, what is the actual cost of the asset for income tax purpose? What is the actual cost of the asset for income tax purpose? Quickly. What is the actual cost of the asset for income tax purpose? Kanaya. See, everyone is saying 12 lakhs. All of you. Do you know why you are saying so 12 lakhs? Why is it so? You are saying, sir, the concept of price, the word price is not synonymous with the word cost. Do you know where you have reached? In terms of determining, you people said, sir, cost is 12 lakhs. The cost is the amount till the point of time when the asset is put to use. The cost is the amount that you incurred on the asset for bringing the asset into existence or putting it into its working condition. That is the concept of cost for the purpose of income tax law. Because only when it is used, that it will enter into the block, and the value at which it will enter into the block is its actual cost. So whatever it takes till the time it is used, the expenditure that you may have incurred on that asset till the time it is put to use, that expenditure will be added to the cost. And it is at that particular price, and it is at that particular price that it enters into the block. Now, can you correlate all these things, students? Can you all correlate this thing? So this is what is the cost. This is what the Supreme Court said in Challapalli Sugar. Landmark judgment. The word price is not synonymous with the word cost. Cost, if I have to just say, don't get terrified, but just listen and go to sleep. The word price is not synonymous with the word cost. Cost is something which of no person of a commercial understanding will misconstrue. Misconstrue means will misunderstood. When no person with a commercial understanding will misunderstand the term cost. This is why you people, when you said 12 lakhs, you are commercial man. You know that these installation charge, these transportation charge has to be added to arrive at the cost, because cost is till the time when the asset is ready or it is put to use. And that is, see how beautifully the concepts are flowing. And that is the time when the asset enters into the block. And that is the time when the asset enters into the block, and it enters into the block at actual cost. Everything is getting connected, students. All of them, nothing is in isolation. Everything is interlinked in this way. So 12 lakhs is the value at which it enters now. And then on that, once it is put to use, then on that, students, the depreciation allowance is claimed. On that, the depreciation allowance is claimed. So this is what exactly it is, students. I hope that all of you are clear with this one. So therefore, what has happened, students, over here? Now let me tell you. In Challapalli, students, now I gave you one example, a simple example. In Challapalli, the facts was a bit different also. The facts over here, students, in this case was over here. Now I'll ask you some questions, students, over here. Say, I think this question I have already asked. I don't remember it. I think I have already asked. But just let me again frame this question again. So this is your tax year 2026, 2027. So here you have taken the loan, students. Loan was taken to construct the asset. To construct the asset. Okay. From this to this period, I1, interest 1, loan 1, interest 1 has been incurred. Thereafter, here what has happened? Students, on 30th September 2026, business got commenced by an asset put to use. Now there also there is I2 from here to here, and then there is I3. Students, here there is I3 from 30th September to 31st of March. So therefore, this was a question before them. Treatment of I1, I2, I3. Now, here, students, primary tax year, technical business, you may say, just delete this part. Asset put to use. So loan was being obtained, students. Loan was being obtained for the purchase of the asset. Loan was being obtained for the purchase of the asset or construction of the asset. Now, therefore, whatever is the expenditure, now be careful, whatever is the expenditure, now that expenditure, students, can be direct, or that expenditure can also be indirect. But that expenditure, whether it is direct or whether it is indirect, that expenditure is linked with the process. Pay attention now, students. That expenditure, whether it is a direct expenditure or it is an indirect expenditure, but that expenditure is linked with the process. Which process? The process of bringing the asset into existence, or putting the asset into its working condition. All these expenditures will be capitalized to determine what? The actual cost of the asset. All these assets will be capitalized for the purpose of the actual determination of the actual cost of the asset. And that exactly is the point, students. So what is the treatment, students, over here? I1 plus I2 shall be capitalized. Capitalized to determine what? The actual cost. And how about I3, students? I3, after the asset is put to use, now can it be a part of your cost? No, it is already a part of the block now. And once the asset enters into the block at a particular value, you just can't do anything. So I3, students, in this case shall be allowed. Shall be allowed as what? Shall be allowed as deduction. Shall be allowed as deduction, students. This is your I3. Every one of you are clear with this one now? And that exactly how the things has to be considered. That exactly how the things has to be considered, students. So I hope that all of you have copied on this. This is the concept of cost. And from here only the borrowing cost. Remember, there is a borrowing cost standard that you may have learned. In the ICDS also it is there. Same thing is there. In substance, this is a borrowing cost. Why the borrowing cost in that interest and the other expenditure which you have incurred for bringing the asset into existence or for the purchase of the asset? Those borrowing cost is added to determine the actual cost till the time the asset is put to use. Till the time of the asset is put to use. In accounting, you say ready for use. Here we say put to use because at that point of time, the asset will enter into the block. Is that point, students, clear to all of you or not? Just tell me one thing quickly. Quickly. Index 23. Muskan? Perfect. Commercial accounting principle. Kanaya? So if you can, students, link everything, na, it's like a loop. So if you read the topic in isolation, Kanaya, then it becomes like a giant, it intimidates you. Now, can you visualize the asset entered into the block at this value? So till the time it entered the expenditure, which is connected with the asset, it should not be an isolated expenditure. Sir, I was doing a marketing can can I capitalize those marketing on my asset cost? No, you can't do that. What I told you, the expenditure, whether it is direct or indirect, should be linked with the process of. Just write this point, students, otherwise you may goof up. Did you all copy that particular diagram? I hope that you already have done it. The diagram has been copied, students. So just below this diagram, can you just write one sentence? For I1, please write the principle. The Challapalli sugar mill. This is a landmark judgment, students. Challapalli Sugar Mills Limited, Supreme Court. Now we have got ICDS. One can refer, but these ICDS, all they are inspired with these landmark judgments. Challapalli Sugar Mills Limited, Bokaro Steels Limited. These are all the landmark judgment, students, of the yesteryears. Empire Jute Company Limited, followed by Nani Palkhiwala. You may not be aware of him. Nevertheless, please write Challapalli Sugar Mills Limited. In that you write expenditure, whether direct or indirect. Expenditure, comma, whether direct or indirect, comma, which is linked, with the process, of bringing the asset, linked with the process of bringing the asset into existence, bringing the asset into existence, or putting it in its working condition, or putting it in its working condition shall be capitalized. Shall be capitalized. Full stop. Therefore, the expenditure should have a nexus. The expenditure should have the nexus with the process. The process of construction, or acquisition, till the time the asset is put to use. Till the time the asset is put to use. Fine, students. So this is the concept of cost. Now, from the cost, so this is what is the concept of cost. Challapalli sugar mills. Now, from the cost, we come to the concept of actual cost. So first, students, you have to understand what is cost. And after that, the next concept. And what is the next concept? What is the actual cost? Now, herein, actual cost. Students, we will write this statement. Cost of the asset. I already told you, no? Actual cost of the asset to the SSE. Actual cost of the asset to the SSE. This is what I told you. Actual cost of the asset to the SSE, students. And then you can see there is some going to be plus and there is going to be some minus. And this is what exactly the thing says all about. Say less portion of the cost. Portion of the cost met by another person. Portion of the cost met by another person. That is for one aspect. Second, students, in this case, so portion of the cost met by another person. After that, what else? Herein, subsidy on depreciable asset. This is covered in the ICDS funds. On subsidy on depreciable asset. Third one is ITC. Availed. Subsidy on depreciable asset. Will it be reduced to determine the actual cost? Will it be reduced to determine the actual cost? And the answer is yes. And the answer is yes. What would be added, students? In the list of what has to be added, as I told you, there is now ICDS, students. You can just take a note ICDS 5. Then foreign exchange rate fluctuation. That is another thing. The third particular part, students, after foreign exchange rate fluctuation, borrowing cost, ICDS 9. Borrowing cost, ICDS 9. That is it, students. That is it. And students, all these are, so subsidy, this is also an ICDS. Intangible, the tangible asset ICDS number 5. Forex, again ICDS, again ICDS. ICDS gets through with this one. So students, I'll see you in the next particular class. Over here, now you can tell me any query that you people have up till now. This is what we will discuss, and then once that has been done, we migrate to the other sectoral provision, probably in the next particular session. Students, any particular query that you will have over this, please let me know just now. Any query on this concept that we have discussed. Goodwill, technically, rather, you will come to know 35 AD. These are certain things which are being paid out because these are what they say specific asset. Goodwill, technically speaking, it could be for n number of things. The reason why goodwill could be excluded is that there is no definitive aspect of goodwill. It could be anything. It's a very general term. You have got a location advantage. I pay you extra. That is for goodwill. You have some additional business advantage, maybe like a non-compete agreement in your business. I pay you extra. That extra is goodwill. So goodwill is like a floater, not something which is static, not something which is fixed to a particular item. And that could be one of the possible reason being. Therefore, if you take goodwill into account, many aspects which are not definitive, but you pay something extra for something, that could be considered as goodwill, and therefore you will be eligible for depreciation. So therefore, this not big. So this is very restricted category. Understand? The block, the block eligible assets are very restrictive in nature. Goodwill was the only category where you can have a very expansive interpretation. Anything can be considered as goodwill if you pay extra. And that is a danger that they saw, and hence they said that this is not something definite to a particular class of an asset. It could be for anything that you pay extra, which could be considered as a goodwill, and hence the restrictive scope of the category of asset being tangible and intangible, that is something they wanted to maintain the sanctity, and hence the goodwill per se is out from the race. That could be one of the reasons. Not the only reason, but one of the strong reasons. Other than that, students, please revise, students, because this is the biggest particular area of your entire income tax law. This concept. That is it. This concept